Hello traders, welcome back to my channel. In this video, I will explain full fundamental analysis of major currencies. How I do fundamental analysis. How you can adopt fundamental analysis. Yeah, I know everybody keep talking about fundamental analysis, but no one tells you how to start and where to start. From my understanding, I start with GDP, consumers, labor market, and inflation. I will align all this and think like a central bank, see whether they hold rate or cut or hike the rate to predict the strength in the market. Now jumping into the main content, starting with US dollar. US GDP grew 4.4% this quarter, 3.8% last quarter. CB consumer confidence decreased to 84.5 points from 94.2 points. Retail sales increased to 0.6% from negative 0.1%. The unemployment rate decreased to 4.40% from 4.50%. The NFP average is around 50k, slightly decreased from 56k last month. Inflation rate is at 2.70%. Now, concluding this, strong GDP, strong retail sales, steady employment. Here, the Fed will hold the rate further to keep this economy strong. But thing is that US dollar is very uncertain just because of Trump's tariff. So neglect this US dollar until tariff is removed or world is certain. Next, moving to Euro, GDP grew 0.3% this quarter, 0.3% last quarter, the same GDP growth rate. Consumer confidence increased to negative 12.4 points from negative 13.2 points. Here, the consumer confidence measured in negative points. Retail sales decreased to negative 0.5% from 0.1%. Unemployment rate decreased to 6.2% from 6.3%. Employment change increased to 0.2% this quarter, 0.1% last quarter. Inflation rate decreased to 1.7% from 1.9%. Here, when we see inflation is decreased to 1.7% from 1.9%, below central bank 2% target, meaning ECB may cut rate, which implies euro may weakens next few weeks. Moving to GBP. GDP grew 0.1% this quarter, 0.2% last quarter. GFK consumer confidence increased to negative 16 points from negative 17 points. Retail sales increased to 0.4% from negative 0.1%. Unemployment rate steady at 5.1% from last 2 months. Employment change increased to 82k from negative 16k. Inflation rate increased to 3.4% from 3.2%. Here, all the factors in UK is very strong, which means UK central bank may hold rate to ease inflation and further economic growth. Moving to Canada, GDP grew 0.6% this quarter, negative 0.5% last quarter. Consumer confidence is around 46 to 47 points from last 3 months. Retail sales decreased to negative 0.5% from 1.3%. The unemployment rate decreased to 6.5% from 6.8%. Employment change decreased to negative 24.8k from 10.1k. Inflation rate is increased to 2.4% from 2.2%, which means Canada Central Bank may cut the rate to improve the condition in the labor market. Traders, you really feeling bored? Yeah, I know. Fundamental analysis is too boring, but no option. To be a profitable trader, it is necessary. Stay until the end of the video I will tell the currency strength based on the data so you can trade accordingly. Moving to Aussie dollar, GDP grew 0.4% this quarter, 0.7% last quarter. Westpac consumer confidence decreased to 92.9 points from 94.5 points. Household spending decreased to 1.0% from 1.4%, but positive from last 4 to 5 months. The unemployment rate decreased to 4.10% from 4.3%. Employment change increased to 65.2k from negative 28.7k. Inflation rate increased to 3.8% from 3.4%. Here, Australia's central bank will hold rate to maintain the economic growth and further development. Moving to New Zealand dollar. GDP grew 1.1% this quarter. Roy Morgan consumer confidence increased to 107.2 points from 101.5 points, continuously increasing from last 5 to 6 months. Retail sales increased to 1.9% from 0.7%, positive from last 5 months. The unemployment rate increased to 5.4%. Employment change increased to 0.5% from 0.0%. Inflation rate increased to 3.1% from 3.0%. Here, when we compare the data, NZD Central Bank means New Zealand Central Bank will also hold rate to maintain the economic growth. Moving to Switzerland, GDP contracted to negative 0.5% this quarter, 0.2% last quarter. Consumer confidence increased to negative 31 points from negative 34 points. Retail sales increased to 1.0% from negative 0.1%. The unemployment rate increased to 3.2% from 3.1%. Employment change steady at 0.0% from last 2 quarters. Inflation rate is at 0.1%. Here, CHF is considered as safe haven currency, so I stopped trading it until uncertainty in the world is over. Next, moving to JPY, Japan. Japan is also considered as safe haven currency, but reading the data, GDP contracted to negative 0.6% this quarter, 0.5% last quarter. Consumer confidence is steady at 37 points. Retail sales decreased to negative 2% from 0.7%. Household spending also decreased to negative 2.9% from 6.2%. Unemployment rate steady at 2.6%. Employment change also steady around 68k. Inflation rate decreased to 2.1% from 2.9%. As I told you, JPY is also considered as safe haven currency. So stop trading safe haven currency. Already it moved like anything. If you really want to trade CHF and JPY, then risk management is necessary. Now, when we see the currency strength, New Zealand will be the first, following Aussie dollar, following GBP, following Euro, following Canada. So that's it for today. If you really find this video helpful, like, comment, fundamental analysis in comment box, subscribe to my channel. Stay tuned for the next video.